The financial services sector has a variety of career opportunities that require specialized skills. The Institute of Advanced Studies in Financial Markets provides such training. On Money Moves tonight, we discuss the opportunities and the type of training a prospective candidate will have to undergo and the type of environment they will be working in. Lawrence Madzwara is the Managing Director of the Institute of Advanced Studies in Financial Markets, and he's with us tonight on the show. And of course, we will be using his experience to find out what is happening with the markets and the kinds of things that as ordinary folk we need to familiarize ourselves with in order to get our money to work for us here on Money Moves, brought to you by 274 Investment Managers. Mr. Madzwara, pleasure to have you with us on the show.
Thank you very much for having me.
Much appreciated, sir.
Thank you.
Firstly, give me a little bit of background of the financial advanced studies in financial markets.
It's a private company that offers training in financial markets, primarily to asset management companies, to banks, and also as part of our secondary offering, we also do consulting, especially when it comes to valuation or some of these complex financial products. For corporates, we also do that. So it's primarily for guys who are already working. We are not yet to the stage where we can offer course for the general public because some of these courses are highly specialized.
Well, what type of courses? They are highly specialized, and I will look at them from a layperson's point of view very soon, but just talk me through a few of those.
Maybe just to give a bit of background in terms of how we look at the financial markets in general to get a bit of perspective. Because we look at financial markets as a market that's comprised of different asset classes, which we can call them risks. This start with your inflation as a risk, you've got interest rate as a risk, you've got credit risk, you've got equity risk, you've got commodity risk, and you also got foreign exchange risks. Those risks are what make up the financial markets. So there are different instruments that are actually designed for that market, which you call them cash instrument, like buying shares, buying currency, buying commodities. And then you can have other instruments which are actually derived from those instruments, which are mainly for risk management purposes, could be taking a view in the market, which we call derivatives. So it becomes more and more complicated when you start dealing with derivatives as a risk management or a speculative tool that people use in the market. So our course, we offer basic course to understand the basic underlying asset classes, and then we offer more advanced courses for people to understand the more advanced complex derivative structures. The unfortunate part about this whole thing is that when you actually become more complex, you start dealing with a lot of mathematics. Hence, our courses are also anchored on mathematical abilities, so that you need to actually have a good grounding in mathematics to be able to understand some of these asset classes and products that we're dealing with.
Well, I'm going to jump into that complex world of yours and come to the common person's world, because mathematics or not, we still have got to understand what the story is, right? The money that creates all this complexity is the money of the ordinary folk.
True.
So please bring us into the whole secret. If we are common folk like myself, what is it that I need to understand about all of those risks that you've mentioned? And when you use the word risk, I feel like running away from everything else.
Well, you won't be able to make money without taking risk, to start off with.
So that's one thing to understand.
You need risk to make money.
Okay.
And that money that you make is actually the premium you pay for taking that risk. If you don't want to take any risk, though there's some limited risk to it, you can take your money, put it in a bank. In your call account or a deposit account, you are sure it will be there because the banks are regulatory institutions that your money is going to be safe. But the returns that you're going to get are guaranteed, but you're not going to get enough premium. For example, if you invest your money in the equities, in the stock market, or you go and buy currencies. So the premium that you're actually paying for is actually taking the risk of uncertainty about the future. That's the premium you pay, because there's uncertainty about where the market is going. And anybody who can come and claim that they've got a formula, or they can tell you that they know where the market is going. We all have views and sentiments about what the market is doing, where it's going, what's driving the market, but we're not sure. That's why we use a lot of statistics and probabilities to try and quantify the probability of our expectation to be realized or not.
Okay, The economies are integrated around the world, and South African economy very much part of that. But sometimes when we try to understand it, we think of it as a separate and isolated system. It isn't it? That's number one. And number two, having put that point across, the role of the financial services and the kind of skills required in the financial services, where do they fit in the broader economy?
I think the way we look at the financial markets, beyond just the normal asset class, there are other factors that one needs to take into account, which some of them are difficult to quantify. Those factors could be political issues. It could be geopolitical issues. It could be some policy issues in the US, which may have an impact on how we react this side. Because South Africa, as it is now, we do have investors who are coming from all around the world. We do have companies that are actually global companies who are actually doing business here. So whatever happens I'll just give you an example. SAB now just been bought by MBEF. And you look at the way the price was set on the JSE, it was not necessarily driven by local market. It was driven by the global market because MBEF is one of the biggest beer producers in the world. So you find that whatever happened in other countries will have a direct impact on us here. So for anybody who wants to that's why I always say the financial markets accommodate a lot of skills. It could be a politician, it could be a social worker, it could be a mathematician. You will all have a view and a say in the financial market. There's no one set of skills that one can say, this is all in all that you need. But most importantly, you must understand the basic mechanics of how the financial markets work. That's very important.
Well, you mentioned the point of risk, which I appreciate, because, sometimes you want to take a decision on whether to invest or not, and all you expect is that you should make money. And then when the word risk is used, then you run away and you say, I'm going to stay in the bank. But ideally, the advice people like yourself and your colleagues you would give is that invest so that you can get better returns. That's a better approach if you want to make money, isn't it?
Yes.
So, having dealt with the risk factor, what else do you need to understand about the financial markets? Is the fact that they're integrated, and talk me through the system in South Africa, at least from a South African perspective.
So in South Africa, I think also one needs to understand that the financial markets in general, has got different stakeholders. And these stakeholders come from different industries. You've got the private individuals like you and me. We are part of the financial markets because we are also part in terms of buying and selling of these securities. And you also got the banks who are actually making the price, so they're market makers. You've got insurance companies who are actually using their premiums to go and invest in the markets. They don't look like a pyramid scheme. You also got asset managers who take your pension money. They go and invest in whatever asset that they value in the market. Could be bonds, could be equity, whatever it is. So the issue that one needs to understand in terms of how the market is structured is there are rules, which is the most important part. Because when we offer these courses, the most important thing that we actually emphasized is that when the financial market looks very glamorous, but you need to work within the ambit of the law. And if you don't, there are consequences. For example, the insider trading is one of them. If you make money through insider trading, it means you're using private information to go and take advantage of what the market is going. That is not public available to everyone. It's an unfair advantage. Therefore, under the Financial Markets Act and the JSE rules, you are supposed to actually, number one, you have to pay back the money you made through that process. Secondly, you're going to get a fine or imprisonment. So it's quite important to understand that the structure as it is highly regulated so that there can be a fair playing field for everyone. And the other biggest stakeholder in the whole thing is actually the Reserve Bank. Because the Reserve Bank, as the issuer of a Reserve Bank government, as the regulator, and also have the government raise a lot of bonds in the market, they are integral part of the entire financial system. And also of utmost importance is the credibility of the numbers that we use to make sense of the financial markets. They actually come from auditing companies. So the auditing company play a major role in actually producing those numbers that we as the consumers, the investors need to look at those numbers as, do these numbers make sense? So if the auditors are not doing a good job and the numbers are unreliable, it's very difficult to invest.
How do you demystify the financial market for us? And I suspect that could be the reason why we're told not many people participate in it, because it's such a complicated, complex system that we basically stay away from it. But we shouldn't fear it, I suppose. You know, it's something that we could still have a relationship with and also partake and get a share or a piece of the pie.
I think just to make sure that we simplify things to the bone, a financial market has got two words. It's financial and it's market. At the end of the day, it's a market. Like you go to a fruit and veg market, you go buy at the auction, you want to go buy a cow, cat, whatever it is. It's actually a market where you can buy and sell what you call financial instruments. Some of these instruments in the olden days, they used to be physical commodities, where you go to the market, you go and buy, I think, bag of oranges, you can buy commodities, whatever commodities you want to buy. Those are physical commodities. It's part of what you call the commodities market. It's a buying and selling of the securities. Some of the securities, for example, you're buying a share in a company, and that share is actually called a security in lieu of your ownership in that particular company. So some of them are physical commodities, which you can buy and see, you can touch and feel. Some of them you can't touch and feel. But they collectively are called financial assets that are bought and sold in the financial markets.
Let's talk to your colleagues now who may benefit from coming to your institute. What courses do you offer, and why should they prefer your institute?
There's just two things. I think what we do, we actually offer customized courses. So we actually, because we're still small, we don't offer what we call generic courses, where you can actually go on the internet and go pick it up. So we actually engage with the client, especially if it's a bank or asset manager, and we customize the training that suits the needs of that particular client. And then we can actually offer the client the training that suits his business needs and also suits the career needs of the employees of that particular customer. So it's not like we are going to off-the-shelf course. We could list the courses that we can offer, but we still customize all those courses.
And for now, it's for professionals who are already in the field, right?
Yeah, it's for professionals.
You haven't gone to the public yet, or youngsters who want to take up these courses?
At the moment, we're not offering that. We're looking to partner with a university or other institution because as a small companies, in terms of managing the entire group of people, because you need to offer examination, assessment and stuff like that. So there's a lot of regulation in terms of how do you run an institute. So we're going to partner with somebody else to make the course accessible to the general public.
But now for those companies that want to send their employees on your courses, where do they go? How do they get in touch with you?
Well, first we also got a Facebook page under the Institute of Advanced Studies in Financial Markets. And also, we're still building the website at the moment. And I think my phone numbers, my contact details, I don't know, I can leave with them with you, whoever, but we're contactable on my cell phone, on emails, lawrencema@isfm.co.za. They can get off me there, or 083-260-5996. That's where they can get off me. So we also do partner with other people. So I don't just teach myself. I prepare all the material myself. I write them down, all kind of stuff. But we also partner with other practitioners. The most important thing about our institution is that we don't let academics teach the course.
It's people who are
taught by practitioners.
Who
can relate to what they're teaching.
Okay.
It's not theoretical.
The Institute of Advanced Studies in Financial Markets.
Yes.
That's the MD, Mr. Lawrence Madzwara. Much appreciated. Thank you for coming and spending time with me.
Thank you for your time.
So there's a bit of complexity, as you can understand and appreciate, that goes into how these different assets work. But one lesson I took away is that, look, if you want to make money, understand that it's a risk and it's the investment that you make that will show your commitment to the returns you expect. So thanks again, Lawrence, and we continue with the show in a moment.